Yeah, I mean, that's one way of looking at the market, but I would insist that that is not the only way of looking at the market.
Sure.
And I'll try and set the context here for our viewers here. I think there's a stark difference in the way how US markets have moved in last couple of days versus how Indian markets have moved last couple of days. Let's look at the S&P. And S&P and Dow, they both have hit a new high, new 15-month high, not a fresh high, but a new 15-month high. So the US market, when it started rallying, the rally was concentrated in and around large tech stocks. You had Nvidia, you had Microsoft, you had to some extent Apple. They were the ones who were leading the market. It was a very narrow rise for the US market. Guess what? That is changing. S&P is up and Dow is also catching up. In India, there seems to be a very different kind of pattern which is at play, which is that look at the small cap index, even yesterday's movement. Let's look at the Nifty intraday graph and the small cap index. I just want to make this very small point here. That's the Nifty intraday graph for you. And that's the small cap index for you. Hello. The small cap index yesterday was down and Nifty was in the green. Why that is happening? Well, thank you Reliance, thank you Infosys, and thank you to the flows. So flows are getting concentrated. They are moving into select large cap stocks, but the broader market, in a sense, what we've been discussing and indicating, is very different. Unlike US market, where the broader market has started participating, apart from Nasdaq, new stocks are moving higher. In India, Reliance, Infosys. So, it's like, it's a very, very different mirror image of what India is versus what US market is. In that context, yes, ladies, we can say we are 200 points away from 20,000. The ring of that is very magical. But the reality of the market is that it's getting slightly choosy. Don't go crazy in small cap stocks. Be lazy in large cap stocks and be choosy in mid cap stocks.
Yeah, and it really played out to that script, Nikunj, yesterday, that the fact that, the broader markets didn't quite play catch up, the frontline index did manage to hold out. It was those large cap stocks that clearly led the way. PSBs were the top laggards, and you do have a number of Nifty stocks as well that were at 52-week highs. So that's really where all your strength came from. Apollo Hospitals, ICICI Bank, Bajaj Auto, Reliance Industries. Those were the ones that really guided the market. So Nikunj, in light of this and what you're talking about, this stark difference with the way we're moving with the US markets, etc., do you think that the strategy now is perhaps to stick only to those large cap stocks? And more importantly, do you think this divergent move between frontliners and mid caps will continue?
So just for the benefit of our viewers who are watching us here, what can they do? If you are with large cap stocks, you just want to wait this week out before you make an opinion. Because you have Infosys numbers and you have Reliance numbers. And if we come on the right side of both these events, Nifty definitely will go above 20,000. So you do not want to sell your large cap stocks. If you are in mid cap stocks, I think only sliver of the mid cap stocks now offer value. And again, they will come with underlying volatility. So you got to fasten your seat belts there. Get choosy, or you got to fasten your seat belts there. I mean, that is how it is. You fasten your seat belt not because you are expecting a turbulence, but you fasten your seat belts because that's for safety. But in small cap stocks, I think you should not commit. You should not commit capital. You should not initiate a new buy. Please avoid a tip in a lift if you are planning to buy into small and mid cap stocks, because the small and the mid cap stocks now reaching what could be called as a dangerous territory where margin of safety is not there. I'll insist, large cap stocks, wait for this week. You'll come on Reliance and Infosys numbers. Fasten your seat belts in mid cap stocks. Very few mid cap stocks will give you this kind of a return. And in small and mid cap stocks, ideally you should book some profits. Yes, you must book some profits, but don't initiate new buy. I mean, I think that tip in the lift, kya lene ka kya lagta hai, in the small cap space, I think that's getting over now. You'll get a chance to buy it again, but my limited point is maybe this is not the time.
Be a little cautious. Yeah. Don't give in to the exuberance. Okay, demerger. This is going to be an important one for Reliance Industries. Remember, today is the last day to be eligible for Jio Financial Services shares. So in case you want to buy Reliance and get Jio Financial Services shares, So, that last date is approaching. It's going to be a share swap. So, yes, you're eligible for today. But this will also lead to a lot of adjustment, right? I mean, for instance, in the interim, we'll have 51 stocks in the Nifty. I don't know if that's happened ever.
No, it's happened once in the past when you had Tata Motors, that adjustment with Tata Motor and Tata Motor DVR. Okay. So it has actually happened in the past. So let's first understand, I mean, this is something very unique, that Reliance is giving birth to a new business, and it's a brand new business. Historically, Reliance has always ring-fenced their main balance sheet to create small companies. For example, Reliance Petroleum, RPL, which was created, it went public, and then it was merged back. This time around, you're getting a free share. When a free share, or when you're giving birth to a free share, and since that free share will come to the existing shareholders, the price discovery has to happen. And because the price discovery has to happen, there's a special session tomorrow. So what the price of Reliance is, tomorrow the real price of the business would be discovered, and that in a sense becomes the price of the Jio Financial Services. Now this is going to be a very interesting business, considering that Reliance, they understand scale, they understand size, they understand technology. They now have perhaps the biggest cahoot in terms of in data network. So this is going to be a disruptive business. And considering that it is coming from the house of Reliance, institutional investors, retail investors, HNI investors, everybody would like to own it. So the move in the Reliance, I think, is largely because everybody wants to buy the stock. Everybody wants to own the stock, whether it's institutional investor, non-institutional investor. That explains that why Reliance has seen a run-up. What happens today? I think there's a technical level at play, which is that Reliance F&O expiry will be at play. You'll have to roll over your positions. And we'll understand from Kunal that rollover happens today or tomorrow. I mean, I'll have to technically figure it out. So this would be a space where, Aisha, I think funds now can see, institutional investors can see that the combined value of Reliance and the Jio Financials, when the price discovery will happen tomorrow, suddenly could give you this 5% additional bonus. And that really creates this kind of an excitement. Now, you're right on the Nifty part, that because the additional stock comes out, if you take the value out of the Nifty automatically collapses. So Jio Financial Services will be part of the Nifty at least for some time. It may not be permanent.
Okay, that's important to track as well. And